All right, we are here. Good morning, everybody. Happy Friday. Are we live? I think so. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Alfonso de Pablos. It's Crypto Friday on the morning show. We got Louis Sykes in the house. We have Kenny Glick in the house. Well, Alfonso hop in at the end of the show here. And I want to talk about what do we got here? We got to talk about this AI, this open AI thing. Did you guys see this OpenAI demo from yesterday? They released their newest agent. We're going to talk about that. It blew my mind. Elsewhere on my mind, we've got some earnings reports to talk about this morning. We have a pre-report. Twilio was not supposed to report, but they said the news is so good, got to report anyway. All-time highs. We'll talk about that. And that's the plan. So what up, chat? Let's go. Smash the like for me, please, and thank you. And let's get the guys on here and roll.
All right, ladies and gentlemen, we are back in session. Mr. Steve Strazza, how are you, my friend?
Good. Happy Crypto Friday to you both.
Happy Crypto Friday. Salud, dinero y amor. That's Spanish.
Mm-hmm.
So I was supposed to go to Jacksonville, as you guys know, and the flights were a shit show. So I said, the hell with it. I'm not going down there. I'm going to get stuck in Atlanta. By the time I get there, I got to come back Friday. I said, you know what? I'm going to do? I am not going to go. And instead, I'm going to sneak away because I canceled everything I had yesterday for the most part. I ended up attending more meetings than I thought I would. I can't help myself. And I was writing the book. And so I was I'm in the perma-bear chapter. Chapter 17 is all about the perma-bears. This is something I give a lot of thought about. And so I was thinking about it. It's kind of like I'm contemplating, what we're discussing in the chapters. I've written extensively about perma-bears. I've had podcasts about them with Perlman, like psychologically, why like they're so crazy and things like that. Try to show some empathy sometimes and put yourself in the shoes of the perma-bear.
Wait, did you just tell us to show empathy?
Yes, show some.
We don't have Steve and I don't have that problem, I think.
Imagine what life must be like for somebody to, instead of just admitting they were wrong, like as it turns out, it was not just a bear market rally. It was the beginning of a bull market, like we were saying the whole time. But let's just say that you were one of those people. Rather than just admitting you were wrong and being like, oh, I fucked up, I got it wrong, and then moving on and then just participating in the bull market like a normal person, you decided to act like a child, and you're so mentally weak because you're such a little bitch that you cannot overcome those biases, and instead you decided to double down for years at a time. Every morning, waking up, telling people that this crisis is going to come and you'll see, and wait till the crisis comes. And then first it was like a banking crisis, and then it was a Fed crisis, and then a yen crisis. And, now it's a Trump crisis, right? There's always this crisis coming. Like you're just making up all these fairy tales in your head instead of just admitting you were wrong and just enjoying the bull market like the rest of us because you're such a little bitch. Like imagine.
Jeez,
so, Spencer, I think that we should, show some more empathy towards these perma-bears. Imagine how difficult their lives must be.
I wasn't fooled by this for a second, by the way. I knew exactly where it was headed.
The one thing that I don't know, because a lot of my knowledge is from a post-financial crisis world, was the cottage industry of perma-bears. Was that a pre-financial crisis, even pre.com phenomenon, or is this a post-08 phenomenon? This idea of
there's a book called Bulls, Bears, and Dr. Freud.
It's a financial publishing phenomenon more than anything, Spencer.
Okay.
It's a big business to scare people. And JC understands that very well. He comes on here and pretends like he doesn't get that. That's the dynamic at play.
Oh, that's one of the dynamics. No, that's true.
Money.
No, Strazza makes a good point. Like in some of these cases, the perma-bears, it's not that they're dumb or being little bitches. They are They're
Crushing
just in
it.
it. They're in it for profits, right?
Yeah.
So they're in it to scare you for profit. That's by design. But
Do
there
you
are
see-
perma-bears. Listen, there are perma-bears out there that are broke as a joke.
Okay.
And in that case, it's because they're a little bitch. It's not that they're profiting from being so
Not though.
stupid.
Have
No,
you
there's
seen?
perma-bears that are super broke.
Have you seen the parties that they throw at Peter Schiff's house? Have
Well,
you seen the parties?
Well, that guy's just like a meme. And by the way,
His
shout out
rappers
Peter
at his
Schiff.
house parties.
Hold on.
So-
Years ago,
No,
I
he's
was
broke.
walking down like in the 40s, in between 5th and Madison, like where all those clubs are, like the Yacht Club and the Yale, like where all the clubs are, like Club Row or whatever, the Yacht Club, beautiful building. And so I'm walking down there for whatever reason, and I see Peter Schiff with two ladies on each arm, like dimes on each arm, like crossing the street, like jaywalking in the middle of like 44th Street. And I was like, okay, dog, I see you. All right, I see you. So, you know, I remember that vividly.
Well, you're making my point. Some of these guys are absolutely cleaning up with.
But is
with
Peter
their
Schiff a
fear.
perma-bear, or is he just like a gold bug?
I was gonna say, I thought he was just a gold bug.
Yeah, he's just a gold bug. He's not so much a perma-bear. It's
Yeah.
it's a different animal, a profitable animal, nevertheless. Though, Strazza is right.
I think they're similar.
Anyway,
Yeah, but
There's a
but
lot
the
of
truth is-
overlap.
Listen, a lot of these perma-bears, trust me, I know, I got my ear to the ground. They're so broke and they're just so desperate. And they get to the point where they just need the market to fall. And like they don't know any other way to progress, which is why they wake up every day being like, oh my God, this crisis is coming. Like they just don't, they're just little bitches. Anyway, so chapter 17 of my book, I was working on that yesterday. So I was thinking perma-bears. I mean, just being more empathetic towards the perma-bear.
What a way to start the day.
wonderful.
You know?
Cheers, salud, dinero y amor, shall we, Mr.
Feel
Spencer?
more empathetic already. I feel it coursing through my veins.
Right. All right, Dow futures down 100 points. This must be the crash that they've been telling us for years. It must be here. The S&P 500 pretty flat, down 10 handles, 61.42. New all-time highs for the S&P 500 yesterday. I've studied every bear market and every crisis ever, and you just don't see a lot of new all-time highs in those environments. So if this is one of those, that would be the first one in history. NASDAQ 100 also down about 10 handles, 22,000 for the NASDAQ 100. 30-year bond futures flat this morning, just under 113 on the 30s. Crude oil, 75, up 1/3%. Copper up 0.5%, 435. Gold up almost 1%, pushing 27.90. Silver up 2.5%, 31.60 with the VIX back to 15. And of course, over in funny money land, you got Bitcoin above 105,000. That's up over 1% on the day. Ethereum just under 3,400, up almost 2% on the day. Solana up almost 5% on the day, 265. Total crypto market cap, Mr. Spencer Israel, 3.57 trillion. And I just wanted to finish out that rundown with the U.S. dollar having one of its worst weeks in a long, long time.
That's what you want to see, right?
You got multi-month highs this morning from the Thai baht, the Malaysian ringgit, the Polish zloty, or złote, is how I'm told that you pronounce it. What else? Colombian peso. I don't know if you saw the Colombian peso this morning, Spencer Israel. New multi-month highs as well. So a lot of action in that dollar. How do we feel about that?
Is this the dollar just getting back to the range it had been in, though?
Brazilian real, Chinese yuan also making new multi-month highs. Is this the dollar getting back to the range that it's been in? Yeah, I think so. And then from failed moves come fast ones in the opposite direction. That is week one of destruction. You know, these unwinds tend to persist. So I would be surprised if it was just one shitty week for the dollar. My suspicion is we're going to have some shitty months and quarters for the dollar, and I think that would be quite the tailwind for equities. How do you feel about that, Mr. Strazza?
Yeah, I like it. Continue to think the intermarket landscape is improving for risk assets. And it's a big positive because risk assets did okay even when the dollar was rising.
Yes, and I think that's the biggest thing. You know, if you would have told me that the dollar would have ripped like it did in the fourth quarter, like, wow, what a move. I would have said stocks would have been, somewhat under pressure. They would have struggled, and that would have been incorrect. The resiliency in both equities and crypto and just commodities in general, also, I would argue, very impressive despite the dollar ripping in everybody's face. Can we talk about, throw up the first two slides here, guys. Yesterday, we saw the first new all-time high for the S&P 500 this year. First one. We had 57 of them last year. So we are, that's one. One new all-time high. Was it as good for you as it was for me?
Let's see some follow through. Let's see them stick it, right, to close the week. Big green candles today will make a lot of charts start to look like they have some valid breakouts again.
I appreciate how much you respect the weekly charts, Steve Strazza. For those of you listening out there, what he said is
it's more the concept of follow through that I'm talking about, but it happens to fall on Friday.
Okay. Hedging himself. Next chart, please, Mr. Spencer Israel. Let's cherry pick year-to-date returns, shall we? And again, I'm not cherry picking year-to-date returns. I understand. I'm not an idiot. I was there. Stocks fell in December. We are talking about a 1 January barometer, one of the greatest and most reliable indicators in all of the stock market. Shout out Jeff Hirsch. And this is what stocks have done so far this year. And wouldn't you know it, the only sector that is down year to date is consumer staples. Mr. Strazza, is that historically something you see in healthy environments or when a crisis is coming?
No, I'm fine with that. I'm fine with all the laggards here.
Yeah, that's what we said yesterday, JC. You missed it, but we like seeing the staples down there.
I like seeing the strength from the cyclical groups up top.
Yeah,
I really like
industrials, financials, all outperforming.
Shout out value.
Shout out healthcare. Shout out healthcare.
Wait, did you say shout out value?
Yeah, shout out value investors. What a time. Look at those top 4 sectors. That's a value investor's dream. Maybe 2025, don't call it a comeback.
So one of the things that I'm doing in my book, obviously, I've got a lot of quotes, a lot of friends, so I'm sprinkling a lot of quotes. I don't have a Strazza quote in the book yet. We got to get a Strazza quote.
The quote could be JC talked about writing a book for 5 years and then wrote it for 5 days. That could be
it's been more than 10, but that's another story.
I don't hate
one of the great quotes is actually from one Jeff Mackey, believe it or not, many, many years ago. And the quote is that value investing is a marketing term, not a strategy.
Aren't most things marketing terms?
That's fine. I'm good with that. Yeah.
Like most things lose all meaning eventually.
And I'm not just giving him a shout out because he's part of the family now. Like that was like legit, like old, like that's probably like a 10-year-old quote, maybe, real quote. Does that make you smile? Or does that make you upset, Strazza?
I'm fine with that. Yeah, I think value stocks will have their time again. I don't think it's growth forever, like some people are saying, but got to see it. This is a start. This would be a start to something like that.
Yeah.
What we're talking about, so everybody understands, is energy, industrials, materials, financials being at the top of this performance chart here. That means that the value sectors are outperforming, albeit over a very short time frame, starting Jan 1.
Also, I just want to circle back on this market breadth thing, because there's people who don't bother to count who has very strong opinions. So as somebody who actually takes the time to count,
breadth is improving.
I would argue that that I have somewhat authority on the subject matter because I actually do count, right?
Yeah.
Rather than like randomly subtracting 2 numbers from each other or like taking 2 numbers and just arbitrarily dividing them by one another. Like,
yeah, I get what you're saying.
It's not for me. I like just counting 1, 2, 3, right? So if you would throw up slide 4, please, if you will, Mr. Spencer Israel. So think about the logic here, right? I have people, these are grown adults, telling me that market breadth is weak, right?
It was.
When there aren't any stocks falling in price. So if, by definition, if you don't have stocks falling in price, that is healthy market breadth. You see, so there are no spikes at all in the new lows list. Not 1 month lows, 3 month lows, 6 month lows, 12 months lows. Nothing. Zero. New all-time highs in the S&P 500. New all-time highs in the German DAX. This is not just a tech rally. You're seeing it globally. And even if you weren't, a lack of new lows is by definition healthy market breadth. Sector rotation continues to drive this market higher. Consumer staples on a relative basis making all-time lows. Is that what, like, serial killer is going to look at that and say that that is negative and bearish rotation? Like, are we looking at the same market? Count. Before you say dumb shit, go count and see for yourself. And then proceed to share your conclusions. But I will argue, I will die on the hill that if you are not seeing the prices of stocks falling, by definition, that is healthy market breadth. Any further questions, Your Honor?
Spencer, you want to take this?
Not about that. I'm sort of going over the previous conversation in my head still because so no, not about breadth. I have no comments. No.
Am I crazy? Stocks not going down is healthy market breadth. Like, is that like this like crazy earth-shattering revelation?
The new lows indicator, some of them, many of them, hit their highest level since 2023, late last year. But stocks weren't going down when we got those readings.
That's right.
I don't understand. Like, where are you starting when you say this stuff about breadth? Because it had deteriorated. Breadth was weakening in a big way at the end of the year.
Yeah,
they
such a big way. That's why the market's at all-time highs.
Yeah, because they come out and repair the damage. That's how this works.
So we call that sector. We call that sector rotation. Josh Brown on the podcast last week calls it rebalancing, right, or something like that.
But to sit here and act like breadth wasn't deteriorating at the end of the year is to be very dishonest about what has happened, I think.
All right, I counted. I'm telling you.
So it wasn't deteriorating, or it just looks better now? Can you clarify that for me?
It looks exactly the same. I don't think anything's changed.
It looks exactly the same now as it did a couple weeks ago. See,
yeah, I mean, maybe like the percentage of stocks above the 200-day moving average getting back above 60, I would argue is a positive development, I guess. Like, if you really want to split hairs, like, that's not a bad thing. That wasn't in place before, but I don't think much has changed.
Spencer, I can't debate crazy. It's a Friday. We have trades to put on. We have a really busy morning.
No, we had this conversation 2 weeks ago. I don't think we actually, we've had it every day for 2 weeks. So I don't think we need to have it again. But the reality is you do both agree on where we are right now. That's the important. Yes, that's the important thing. But let's focus on that.
Listen, let's be serious. The crisis is coming any day now. It is coming, and you'll see, Strazza. You'll see. You perma bull. You're gonna see.
The market looks fantastic right now. I think breakouts are starting to stick. I think today's huge. I want to see some follow-through candles, stuff like XLK.
How come I only get called a perma bull during bull markets?
I don't know.
I never get called a perma bull in bear markets. I get called a perma bear actually quite often. For those of you keeping score at home,
it's bad though, because you come on, you say these things about breadth, and then I see people come on my other shows and start talking about how there's no new lows when new lows are at their highest level since 2023. So it's like you come out here and you say these things enough, and people believe you.
Maybe they should go and count for themselves.
It's a great trick, isn't it?
I'm not asking anybody to believe me.
Invent your own facts.
The data's there. Go count.
And then people start repeating them. It's madness.
Okay, well, fine. Too bad. Tough shit. Go count.
The one thing that confused me, not on the breadth thing, I'm still on the value thing from earlier, because Steve was saying, you guys are saying value is outperforming, and I thought, really, is it? So I pulled up the IVE, which is like my kind of go-to in my head, right, for value, is the S&P value ETF, and I saw it's underperforming, but then I looked at the IV and I realized, oh my god, it says it's a value ETF, but it's 20% Apple, Microsoft, Amazon.
As are many indexes.
So how much value is this value ETF really? So then I just did a whole circle in my head. I don't know where that left me, but I guess the value sectors are outperforming, as Steve's point, even if the value ETFs are not.
I would love to discuss this with Todd Sohn, because it sure feels to me that over the years there's been a bit of a drift in a lot of these funds that maybe would otherwise be underperforming even more. And I think they can easily get away with it because they're all momentum strategies. So they're all cap weighted. So if they put in the biggest mega cap growth companies, they're just going to get bigger, right? It's just a matter of allowing them in to the fund, and then they'll dominate because they're cap weighted. So they're all built poorly. In fact, I think the best, value ratios that we look at are with our own custom indexes, where we're kind of building them ourselves and making sure that all those mega cap growth names are not included. Over the years, we've done things, what worked really well over the years? Just taking energy, industrials, financials, materials, blending them into their own equal weight index and treating that as a value index. And then you could even make your own growth too. If you have problems with growth, you could take communications, discretionary, tech, equal weight those, throw them in an index.
This is probably the way, is to do it by sectors, to do it by industry group, and not just paint the whole market with a value brush or a growth brush, because it's more nuanced than that. So IVE, shame on you. You fooled me this morning. Anyway, can we talk before we bring Kenny on here? Can we talk about some of the the news or the movers today? Because we got a few things happening.
Yeah.
If we have a chart of Twilio, I'd love to bring it up. I don't know if we do. Twilio was not on the schedule to report earnings this morning, but they said, or last night, but they said our numbers are just so good, we have to pre-announce them. That's how good they are.
Wow.
11%
right now.
11% revenue growth for Q4. GAAP income, non-GAAP income, revenue, it all came in above their prior guidance expectations. And the stock is up 19% this morning.
Some of these patterns, right? This is that same old rounding bottom that we've been talking about for years now. Some of them go immediately. This one, you had a nice coil in late October, popped right out of the base into another coil, popping again. Really, it hasn't slowed down at all since it broke out of that base. And then other ones come out of these bases and they're slow and sloppy and full of false starts. It's hard to know what you're going to get. But earnings reactions very often are the catalysts to break out these patterns.
It's not just earnings. I think sometimes just headlines in general can be that catalyst, right? To break out of a range. With
earnings, if you got a company, that's on a good fundamental run, you get 4 shots a year, right, to pop your stock. It's tend to see pattern resolutions come around, earnings.
Anyway, yeah, Twilio, that last gap up was from their last earnings report in October. They crushed it then, and they held all those gains and then some, and then they just came out and said, yeah, it's still great. $135 right now in the pre-market session for Twilio.
Software and semiconductors both trending really well out here for the past 2 weeks.
Is that healthy sector rotation, or is that deteriorating market breadth?
I'm not gonna do this with you anymore.
I'm just asking the question for the audience, if you can help me out. So what you just said about software and semiconductors, is that negative market breadth, or is that healthy sector rotation?
I'm trying to think of a response. The market looks great right now. Market internals look fantastic right now.
Yeah. All right. But they didn't in the fourth quarter.
No, they were trash. It was actually, it got pretty concerning.
Okay.
People were talking about possible fall days. You remember?
Thank God these people got squeezed and the market ripped in their fucking face. They deserve everything.
Nobody called it, but they thought about it. Is all.
Good. Nothing better than angry people getting squeezed.
You act like
not everyone who's bearish is angry, JC.
JC, real shocker. They bought the dip in a primary uptrend, right? You're just leaning into a corrective wave and pretending like breath didn't deteriorate through it, because that odds are that they're going to dig in and rebound it, right? So that comes
because consumer discretionary was making all-time highs. All-time highs on a regular basis.
Next time you get bearish, I'm going to call you angry. You're just an angry guy, JC. Stop being so angry.
All right.
Making fun of perma-bears.
Why?
I'm not making fun of perma-bears. I'm writing a whole chapter about it. It's about the psychology.
Why does anybody need to read about them?
Because I think it's important. And when you write your book, you could write whatever you want to write about. But it's my book.
Sounds like your book might be too long already.
Fuck.
Kenny.
Now you have a point. Now, but you know what? Speaking of Jeff Mackey, another Jeff Mackey quote. I swear to God, I'm not doing it on purpose. Jeff Mackey, I spoke to him like a couple of weeks ago. I had written like 12,000 words that day or something crazy. And he was like, wow. And you know what he said? He goes, just put it all in and then you can just take stuff out. Right? Is what he said. And I think I'm going to have to do a lot of that taking out.
He's written a book. He would know.
Right. That's why I asked him. Yeah.
Kenny, please save us from this. Are you here? Kenny's here. Please save us, Kenny. I can't.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house. What's up, my man? Speaking of perma-bears.
Yeah, what's up? Do I get my own chapter? I'm in a book, and I also wrote a book. You guys ever want to read a real book?
By the way, you are
infinitesimally small balls. This is my story. It's a fantastic journey of how I blew up my account 3 different times and how I've learned how not to be a bear. That's all about being a bear, but learning the hard way.
Kenny's in chapter 3.
Blood.
You know that, Kenny? You're in chapter 3.
Yes.
You are.
I mean, also that there was a guy. He wrote the book that I hand out to everybody, the 20 mistakes that most traders make. I'm in that book. And a guy. By the way, speaking of books, no joke. If you haven't read that book, I don't know if back in the day, I think you know him, Mark. I forgot his last name now, but he wrote a book called "Why Traders Fail: The 20 Most Common Mistakes Most Traders Make." It's basically a little pamphlet, and you read it, and everything that anybody's ever done wrong is right there in black and white. And it's a good read. If anybody wants it, I still have the manuscript. Just reach out to me. I'll send it to you.
Yeah, you can all just email Kenny or email us. Our email is in the description, and we'll send you guys.
Yeah. By the way, that's when I had hair too. Look at that. Look at that guy. Look at him.
Damn it. I just googled that. I shouldn't have googled that. Okay.
Landing strip, chest hair. Can we talk about this bull market, Kenny? New all-time highs yesterday for the S&P 500. NASDAQ 100 on pace for the highest weekly close in human history. So, how does one who approaches the market on an intraday basis use that information, or are you kind of ignoring that? How do you think about it?
Well, it goes right to the 0-date options. When my mentor, his name is Isaac, and I still conjure up him. You're looking at the cues. Hang on, put the cues up. So, because we're in a perpetual bull market, and if you've ever heard the saying, "Never short a dull market," basically every morning, what I do is I breathe in. If air fills my lungs, that's bullish. So we're just trapped. I mean, I'm trapped in a bull market, but it keeps me on my toes. I know that a lot of these stocks that we trade in the morning are pump and dump. So again, the bullishness, I'm not going to ignore it like I did, for 3 years in 2012 to 2015 and get my ass kicked. So again, yesterday, knowing that this market continuously resolves itself to the upside, and having this wonderful new product called 0-date options, look at this QQQ move. I mean, all day you're just chopping along, just faux show broing everybody out of the trade. So later that day, again, we had some money to play with from some good trades. You throw a couple of $100 on these QQQ options. They were 8-cent options that ripped to 80, and bang, it's almost every day. You just have to stay bullish this market until it proves otherwise. And if the UVXY continues to fall, the VIX continues to fall, these products are just telling you that the all clear signal is still being sent. And it's a great market to just keep buying dips on everything. So good times.
Kenny, you are slated to lead a discussion in next week's Portfolio Accelerator. I would love it if you could discuss the faux show bro and Andy Dufresne.
Yeah, that's all we're going to be talking about.
Okay.
And again, one of our big winners came out of an Andy Dufresne again yesterday, this Clove trade. If anybody's been watching it, this is steady accumulation. So the Andy Dufresne, obviously this stock, let me just show it to you on that 3-year chart where I get all these crappy stocks coming out of the woodwork. So here's a 3-year chart. Let me get a 5-year chart on it. You guys know Clove, but let me show you. I don't know why the chart's not working where I want it to be, but let me put it on a weekly. Stretch it out for you. There it is. So basically, the Andy Dufresne, if you're just joining us, when a stock just sits in the muck and there's just nothing going on, and it's just traveling through that tunnel, making its way to freedom. And when they come out for freedom, they run. I mean, the explosion here doesn't seem as amazing as it was, but this was $1.20 and it ran to 470. But focus back now to the last 30 days. Look at this steady accumulation in the stock. I mean, this is going on for almost the entire month. Look at the monthly on the stock right here. This is 20 days. 20 days of basically steady inflows. So all we were looking at yesterday was the 450 calls on Clove were sitting there at a penny. And this stock looked like it was on a collision course with that recent high of 470. So I'm thinking, why can't we just buy these 450 calls here for a cent or two? If this thing pops 20 cents, it's going to be a 10 or 20 bagger, and voila, we hit it. And now we're sitting with this Clove money. And now that it made this dramatic turn, now we go back to that 4-year chart. Look what this stock could do. You're looking at another 100% possibly on this next leg up just to get to where it broke down from way back in 2021. So Andy's telling us it wants to hit 7. I'm loving this stock. And again, it's had a nice run. Little consolidation is what is due. But then this next leg up, once we get through 5, I'm thinking $7 on Clove, and I'm loving this thing. So that was an amazing trade yesterday, and that money parlayed into the QQQ trade. And of course, all the earnings reversals have been working. It is, I got to say, this is the best trading I've ever seen in my life. And I say that a lot, but every day it's just one.
Can I ask you this? You know, as somebody as literally the grandfather of day trading, somebody, you know, there's nobody on earth who's been day trading longer than Kenny, because day trading started when Kenny started.
I'm
right?
old.
Yeah, you look great, by the way. How many push-ups are you doing every day?
Averaging 200, 250. Yeah.
Not bad. No, Spencer, how many are you doing?
I'll wear my wife beater on Tuesday.
Under.
I'll do my presentation in the wife beater. I've been working out.
Yeah, I'm more of a machines guy.
More of a machines guy. You wear Skechers?
No.
So Kenny, let me ask you this. So
yeah, man.
You talk about how this is the greatest environment ever. There have been some pretty good environments in the past. What is it specifically about this one that stands out as quote unquote the best? Or is it your recency bias that you just like?
No,
you know?
it is. But the last couple of years, I mean, ever since, COVID really just sparked day trading again, because we were all trapped in our house. And I thought that was just going to come to like an end once we were free, but it never has not gone away. The reason it's great right now, follow through. Sometimes you'll get a market where it's bullish, but there's not much to do as a trader because we're just grinding higher and everybody's making money if you're long, but the trader's just sitting there bored. This market, you're getting follow through on both sides. That's why you're getting the fake out, shake out, breakouts. You're getting the rips and the rolls, and you're able to trade both sides to the market. For instance, just like, what was the one we traded the other day? Well, look at Schwab, just for an example. Intraday, you're able to trade both sides to the market. So, again, yesterday was a nice, more bullish, but 2 days ago, you're able to trade both sides to the market. So you're able to play the fades. The fades are the short at the open, and then the dips are being bought, and you're able to buy, go long, and then possibly short later that day. And there's follow through. So you're able to take both sides of the trade, and there's action all day. And usually the market, in the bull market, generally you'll go dormant between 12 and 3, and we'll just consolidate gains. Now there's still action in the middle of the day. So you're really, once you get your skill set and learn the market mechanics and understand pattern recognition around the VWAP, it is really just a candy land of opportunity. And once you understand what you're doing, stay focused on the earnings report, stay focused on where the volume is. It's just amazing. It really is. And what's really good about it is that the fear of missing out doesn't exist. If you think you've missed a trade, so what? There's another one that's even better coming along in the next couple of minutes, or you might have to wait a day. So that's what's so good about it.
Another quote that I put in my book was about the train. I think it was like, what was it? Trading opportunities are like a train station. There's always another one coming.
Yeah, absolutely.
Something like that. I'm misquoting it, but it's something like that.
Yeah. What I look back as, because you know, again, my wife's had to deal with me ranting and raving for 25 years now.
God bless her, by the
Yeah,
way. God
right.
bless her.
So it's like I walk out of the room. She could tell by the look at my face. She's like, "Oh, wait. So that's the face where you bought a stock, you sold it, and it went up after you got out. Ooh, tell me that story again." But the point is, I've told that story 1,000, 10,000 times. And it's finally dawned on me. So wait, so that means there will be another opportunity, because I'm always complaining about stocks that have gone up without me, which means there must have been another opportunity. What am I complaining about? So there's always another opportunity. And it could be these 0-date options. It could be a Clove coming out of nowhere, or some other bullshit biotech stock like EVAX today. Here, let me show you what we traded this morning on EVAX. They just keep coming out of the woodwork, friends. And right here, there's the faux show, bro. VWAP break, wham! This is a $5 stock going to $7.50. And then look what it does. You know, here's the big move. The reason the faux show, bro, is so important, especially if it holds the VWAP on the pullback, it shakes the longs out, and it also convinces people like me, when you see a stock that's up 600%, as a shorter, all we want to do is crush this stock because we know it's a pump and dump. But then when the dump doesn't get dumped and it turns, the shorter has to cover. The long who just got out, he wants back in, and then fear of missing out comes back. You got a triple reason to buy this stock, and look at the break. 750 got you to 11. Yep. And then where does it come back to? The same exact price. So when it got back there, we were like, hey, we just did the Jerry Orbach trade. Everything's got a nickname. And we bought it again right here. When it
Jerry all back, because it gave it all back.
Gave it all back. There you go. You understand. So
I've been doing
we
this.
Just bought this one right here. And again, for the guys that are just, again, the day trader looking to make a day's pay, we bought the stock right here at $7.35 with a 10-cent risk, and the stock pops close to $8. You got 1,000 shares. Congratulations. You're a profitable trader. Have a nice day.
Let me ask you something, Kenny. If there was a money line, and you had to pick one, because I know you're looking at day VWAP, 2-day VWAP, right? You're anchoring from different points. Yeah. If there was one, if the answer is there is none, it just depends. That's okay. But is there one that is like is it the one from the prior day?
I swear by today's VWAP, because you
really?
See how it just lives and breathes at these lines.
All the VWAPs, the day one is the money line of all of them?
Yeah. I choose the 1 minute. And again, as a day trader, 1 minute, you know, somebody called it the 60-second candle. I never heard anybody call it that. I love it.
I kind of love that too.
The 60-second, we're trading in 60-second increments, but sometimes it is. Sometimes you get the dip and rip, and in that 60-second, 120 seconds, if you will, that's your main point right there. And again, these pivot points, and right now, just looking at what we're seeing right here, just on this stock in particular, right? We had some fun with it twice. Now, if it rolls over and breaks the money line, you know it's probably time to get the hell out. And right underneath is prior day VWAP. So again, if you can short the stock, it's actually looking like a short as it rolls, and it probably will hit that 675 as it breaks the 735 over here. So again, we're not long the stock anymore. And if you were able to short it, you probably want to be shorting it right this second. So bang, looking for it to roll over right here. So again, that's what I love about this market. Pump, dump, pump, and dump. You can have some fun and, you know, call it a weekend.
If you guys missed Kenny the other day, I want to say it was Tuesday, Kenny. You were talking about DR Horton. That was like a textbook play.
Right.
I think it was Tuesday's show. Go back and watch that. Also, Kenny had his schmooze last night. It is up on YouTube. It is it's one part trippy concert, one part Kenny Glick dropping.
It was mostly trippy concert last night.
Yeah, all right. Yeah, it was pretty trippy. So check it out, guys. And again, get into his room, hitthebid.com. He's there every single day, trading now and through the open. So
all right, boys and girls. Yo, listen, keep it on the Clove, because you know, that's somebody loves this stock, and it's not just us. You know, that was a massive accumulation right from the beginning of the year. Something's up here, and I love it. And the options are dirt cheap. Keep an eye on it. Have a good weekend, everybody.
Have a good weekend. See you next week, Kenny. Looking forward to that. We're gonna.
I'm ready. I've been stretching out and limbering up. Let's go.
Kenny's gonna be ringing the closing bell. Try not to break the bell, Kenny.
I'll see you guys. Good luck, everybody.
Imagine Kenny Glick breaks the bell at the New York Stock Exchange,
and it's cracked like the Liberty Bell, and they just
like the Liberty Bell. Yeah, that's right.
That's right. All right, I know we have Louis in the house. It is Crypto Friday.
Before we bring in Louis,
yeah.
Strazza, come on in. Sorry to this is important. I want to. There he is. How are you? Thank you for joining us, sir. I want to talk about China. You're seeing this China move this morning? You're on mute, Strazza.
Right. Yeah,
Can-
he's trying to do something.
Yeah. I want to talk about China too. Let's do it.
Let's do it. Can we? So we got the FXI up 1.5% today, while the CQQQ, this is China Technology, which is 10.5% Tencent. You got 8% Pinduoduo, 7% Baidu. You're looking at 3.5% to the upside this morning.
Yeah. And think about the news. I can't.
What's the news?
What? Bank of Japan? That news?
No, the sentiment, right? Trump taking office, all of the tariff worries, they're supposed to be coming any day now. Nothing yet.
Here's the game. Every time,
higher.
here's the game. Every time they say the word tariffs, you buy more China stocks.
Probably.
That's the way.
I don't have enough money. I'll be broke in a week.
You know, the market's a phenomenal discounting mechanism, and China was correcting, all through Q4. And now all of a sudden they're going to come in, maybe enact these policies. Market already priced it in. So wouldn't be surprised to see China embark on a brand new bull market as all of this is going on in the background. I think that would just be perfect.
I'm still a fan. Communism over capitalism 2025. I think that continues to be the move.
Someone emailed in a few days ago, asked if we had a preferred instrument for trading or a vehicle for trading China.
For buying communism?
Yeah.
I mean, FXI is the
FXI.
easiest way, probably. Yeah. I mean, you can get cute and buy the CQQQ. You can buy individual securities. There's a lot of different ways to do it. Like, to me, it doesn't mean it's the best way. In fact, I can tell you for a fact it's not the best way. But the easiest way is to buy FXI.
Yeah.
Maybe not the best way, but certainly the easiest way.
Build your own basket. Go listen to the episode when we had Dave Mazan from Round Hill.
I'll tell you when that was.
Yeah, you could do it that way too. That's been my early strategy: is just buy the biggest, best ones, especially those that are printing trend reversals.
That was on December 18th. All right, we got to talk crypto.
Yeah, Solana all-time highs.
Yeah, let's do it, Louis. Let's do it.
Got my fingers on the pulse, avocado and toast.
Morning, guys. How's it going?
Oh, nice
Louis,
background.
is this the moon? I think this
That's
is the moon.
I mean, look, man, we're chopping right there below those all-time highs.
Yeah, can we throw that up, please? Man, this. I mean, do you really want to short these? I do not.
Absolutely not. No. I mean, look, there's other two trades to be made here. Just patience and just wait for it to break out to all-time highs, or just buy the all-time high breakout. Or if you're longer term, I adopt a little bit more of a longer term strategy, just continuing to remain long so long as the trend is higher, which it clearly still is. Looking to break above to all-time highs. Bitcoin consolidating right below all-time highs. ETH, this downtrend line is pretty clear. So it's look at how well these things are shaped up. It's tremendous.
Can we look at the realized price? So one of the things that I really appreciate about cryptocurrencies is how much transparency we've got that we don't have in TradFi markets. And so, we have in TradFi markets, you don't know whether the people buying and selling are taking a loss or taking a profit or anything like that. But in crypto, we actually do. So if you can explain what all these lines and colors mean, I'm gonna be listening offline. I'm gonna hop, guys. Everybody have a great weekend. Louis, good to see you, buddy. Looking forward to hanging in New York. Steve Strazza, Spencer Israel, Kenny Glick. Enjoy. I'll be here listening. Appreciate you guys.
All right. We'll
Hey,
start by answering that
hey,
question,
look, guys.
I guess,
And so, yeah, look. So this is the chart. So we're always looking at what's happening on chain, because in crypto there's just a tremendous amount of data that we've got that's just available to us, right? All these transactions are taking place on the blockchain. We can analyze them, categorize them, and we just get so much information. So what we look at is how much profit and loss people are realizing trading Bitcoin. Imagine if you had a chart like this for the S&P 500 or Apple or commodities or gold, but you don't. But in Bitcoin, you absolutely do, because everything is so transparent. And so this big purple line, this colored purple line, is what I want you to look at there, where in that massive consolidation that we had from March to about September, you saw that profit and loss begin to dip back into negative territory. You got that massive spike following the election, and then now you're just having that profit reset. And so to me, I think that's tremendously healthy that we've got that reset in profitability, and now we're working back towards all-time highs in the context of a reset in profitability. I think that's bullish, right? And you don't really need this purple line to say that, because we've already backed off in price. So you already know mentally that we've probably had that reset in profitability. And so I think it's quite bullish and quite positive to see that we've had that reset. And I think that provides us with reasonable and fertile ground to build a
So
new
I'm
all-time
trying to
high.
understand how to interpret this information. First off, these are realized profits and losses, right? Obviously, we're not looking at unrealized gains here. We're looking at realized trades, right? So last year, obviously I'm looking at, these lines look pretty correlated, right? So I'm trying to understand the relationship or the signal that you derive from seeing crypto traders realize profitable trades versus realize losing trades. Is this a leading or a lagging indicator, or like how should we interpret this, other than the fact that we know the price is going up, right?
Spencer, I'm going to ask you the question. If you take a loss on a position in an uptrend in a raging bull market, what do you feel like? You probably feel like an asshole, right? You probably feel like, you
Yes,
probably
but
feel like a bit of a dumbass.
there's
And
always
so-
two ways to spin it, right? So yeah. Okay, keep going.
Yep. And so the signal here is that when you get that profitability reset, people are reluctant to sell their Bitcoin at a loss in a bull market. So when you get that reset, that profitability back to zero,
Yeah.
people are reluctant to sell at a loss, and you get that supply beginning to dry up in the market because people don't really want to sell at a loss. That generally marks the low. So and I've done the back test on this indicator and on these profitability indicators. When you get that profitability reset towards zero, great signal. And so you're seeing that here, you're seeing that reset. So I love to see that.
Sorry, I'm looking at the chart more, and I'm thinking about it.
Again, and that this is only showing the chart since 2024, so you can't really see the signal here.
Right.
But longer term, they've done the studies on these sort of indicators. And
So what you're really looking at here is the people's willingness to sell, right? That's really what we're talking about, right? And when they're more willing to sell, it's more than likely to drive the price down, because sellers drive prices down and buyers drive prices up. So is it that simple? Is that?
Yeah, absolutely.
Okay.
Yep.
You know what's cool about this is, like, this is the kind of data, if we're talking about the stock market, this is the kind of data that like Fidelity has and Schwab has, right? They have all this data on their clients, but they would never share it, right? with us, because why would they do that? But and also it would only be for their clients and not for like the whole universe of investors, right? With the crypto, we don't even need them. We have it. It's all there. It's kind of the beauty of the blockchain. So this is very cool. Exactly, Rachel. This is like under the hood. TA. Exactly right. That's kind of how I feel about it. This is very cool. So in other words, to sum up this chart, the price has gone up and sellers have dried up, and those two things equal bull market.
Yeah, precisely.
Love to see it.
Yeah, and so you get that Bitcoin breakout, tremendously bullish. So that's what I'm looking for. Just keeping it really simple. This is what I'm looking for. This Bitcoin breakout. You're getting that churn, that consolidation below, and so this is absolutely normal behavior. And so,
God, can you imagine if Ethereum actually did something? That'd be nice, right?
Yeah, I think there's probably scope for a bit of a catch-up trade to be made here, where if you get that Bitcoin breakout, then you could have that Ethereum catching up. And Spencer, what I would say to you, imagine how hilarious it'll be, right? Because Solana has been outperforming this entire bull market.
Yep.
It's been relentless. It would be hilarious if Solana stopped outperforming and then Ethereum took the leadership after the president of the United States
Use the
launches a
Solana
meme.
network. Yeah.
Use the Solana network to launch a meme token. And you see this all the time symbolically in markets, right? Where you saw commodities beginning to outperform stocks when crude oil traded negative. It's just perfect. And so, I mean, you need to set in price first, but that's kind of what I'm looking on the lookout for. You look at that ETH BTC ratio, potentially a failed breakdown. So very early days, don't want to jump the gun here, but it'll be hilarious to see that.
Yeah, I'm willing to bet that more people learned about what the Solana network is thanks to Trump and Melania coins, right? Because that's how they launched it. So yeah, that would be funny. It would be symbolic. It would be ironic. I'm waiting. I've been waiting for this entire cycle, Louis, for Ethereum to do anything. So it'd be great that'd be great for me. And we'll see. All right. I know it's late for you, Louis. I'll let you hop. You have any final thoughts? We will also see you next week in New York. Looking forward to that. You'll be giving a couple presentations. Anything else we need to know about crypto on this Crypto Friday?
Just have a bit of fun,
Have a bit of fun. What do you mean? I'm trying to have
a bit of fun.
My memes are getting wrecked, man.
I mean, look, we get that Bitcoin breakout. We're going to be having a lot of fun, Spencer. Trust me on that.
All right. Yeah, I mean, I do trust you, but yeah, my shitcoin portfolio has gone the other way the last 3 days or so. So, oh boy.
We'll be talking exactly all about that in New York, so I'm looking forward to it.
Wonderful. All right. Thanks a lot, Louis. By the way, nice microphone you got there.
Thank you. Appreciate it.
Yeah. All right. Okay. Strazza's here. He'll be back in a second. Before I forget, I want to talk about this this OpenAI thing. Did you guys see that demo yesterday? If you didn't, just go on YouTube and just search OpenAI and go to their channel. They had a demo that they released yesterday for paying users of OpenAI, and it's their agent. It's their AI agent, and it will do tasks for you. So unlike ChatGPT, which only answers questions or conjures up images or whatever, this AI can do things. If you say, for example, hey, AI, or whatever it's called, make me a reservation at this restaurant at this time on this date for a party of 4. It'll do it. It'll go on OpenTable and make your reservation for you. If you say, buy me tickets to this game with X amount of seats for Y dollars, it'll do it. It'll go on StubHub and do it for you. It can grocery shop for you. It can do a ton of different things for you. You just have to tell it what to do, and it will go on the internet and use things like Instacart and DoorDash and whatever on your behalf. It's wild stuff, man. Really.
I'm gonna try it this weekend.
Really wild stuff. It's not for everyone yet. Again, it's only for whatever the premium members of.
Yep.
Yeah, whatever. But
that's how they roll these things out. They roll out
sure.
The people who are most familiar with the platform first, which makes sense. The Gemini one is really cool. Also,
I don't know about that.
Google's doing a great job with theirs as well. If anybody in the chat, is using these and finding them to be useful, would love to see those comments. But it seems like it's between Gemini and ChatGPT right now.
I mean, there's a bunch of tools out there. Like I use every day. I use what's it called? Perplexity.
What's that?
I just use it for work. I use it to help me to summarize news and stuff.
Okay.
Yeah, it's pretty good.
But all of them can summarize news stories. That one does it specifically.
I like how this one does it. It tells me what to ask. after.
Yeah.
If I ask one question, it'll give me questions to ask to
Yeah.
follow up.
Yeah,
Yeah,
yeah.
prompt me, which is pretty great. Yeah, Grok is not terrible actually.
Oh,
They rolled that out on Twitter. Not bad.
weren't we talking, what, a week, 2 weeks ago, that this year is going to be the year where AI enters all of our lives in ways that most of us could have never imagined?
Yeah, so like watching this demo last night, it was like one part scary, one part like
Yeah.
awe-inspiring. Because it's kind of hard to understand the ramifications of what, because it's happening so fast, man. It's happening so
It's-
quickly. But I mean, it was cool. It was cool to see a machine, just to watch a machine use the internet on your behalf and do a thing that you told it to do. And yeah, there are some questions in there about safety and some protocols they have to, make sure that people aren't, stealing money from other people or whatever. But
Yeah.
obviously it's not perfect, but it was pretty eye opening to see that this didn't exist 2 years ago, and now here we are. It's pretty yeah, exactly. Googling is like a thing of the past now, because you can just ask an AI, or if you want to use Google, just ask AI to use Google for you.
Slow down. You just covered a lot. First of all, you're absolutely right. It's going to shock people when these innovations enter the mainstream for a number of reasons.
Crazy.
One, you nailed it. It's happening really fast, these innovations, and they can bring them to market very quickly too. Somebody like ChatGPT, they're already there. And most people either don't understand it, don't like it, or simply just don't have the time to pay attention. The news flow is so quick in this. These new innovations are coming so fast, and then they're going to enter our lives, and people aren't really going to realize how amazing some of these innovations are until the day comes that they're using them. So I think people are going to be shocked in a big way this year by some of these things that pretty much everybody's going to have to be using.
And I think last year was the year that AI infiltrated the workspace, right? A lot of people now use it for work, but if you don't use it for work, you don't use it at all. There is no reason to use AI if you don't use it for your job.
Most people aren't going home and having fun with AI tools,
right? But this is the year that probably changes, because people of a certain age, people under the age of like 50, right, are gonna like play with this stuff. And
listen, we're gonna have bots. Smart people will have bots ordering their Instacarts, messaging with shoppers for them. They will be reading emails, right, and administering their calendar to them. All of that stuff that's low-hanging fruit.
Yeah,
it's basically already here. And when it comes, think about it, it's going to spread like wildfire. Somebody comes out and nails something that can
then they all do it.
Yeah. If somebody come out and nail something that can save me an hour a day of looking through email, right, and give it to me, everybody's going to start using it. So I'm excited. I think all of our lives improve based on these new technologies, and that's super fun and cool.
Also, my favorite thing about this demo from yesterday was it was just a stark contrast to like the Apple demos. Apple's been doing demos for 30 years, right? More than maybe 40 years at this point, right? And at this point, there are these massive Hollywood productions, and it's a huge stage and very high production quality. This was Sam Altman and 3 engineers at a table with a laptop with one laptop sharing their screen. It was so low budget, and it was awesome. It was great. It was just 4 dudes staring into a camera.
This was yesterday?
Yeah, it was yesterday. Yeah, it was fun. It was fun. So check that out. It's on YouTube. If you search OpenAI.
He's right about the sex robots. I think it's gonna be weird. That's why I'm a fan of the robot bots, not the humanoids. Yeah. I think as a society, we're better off staying away from the humanoids. A lot of weirdos out there.
Yeah, too many. Let's not go down that road.
Speaking of Sam Altman.
Oh, okay. Anyway, what else was on my list here? I know we had a few earnings reports. We had American Express report this morning. That's trading down a little bit. We had Verizon, which was higher last I checked. It still is. We had Texas Instruments. We had Intuitive Surgical, medical devices, looking good. Ericsson was the big loser of the morning. It was down last I checked about 10%. Yep, still is. That's on their report. That's kind of it. Next week is a huge week, man. We're not gonna be doing well, actually we might do morning shows. We'll play it by ear. How about that? We'll play it by ear. We don't really know. But we got all the big guns next week, right? Apple, Amazon, Microsoft, Meta, the whole thing. So
Big week.
yeah, big week.
As they say.
As far as today goes, let's see. We've got a special stream happening at 2:00 Eastern. Jason Purrs is going live with the macro tourist. We're going to talk about the macro environment from a top-down perspective. So that's 2:00 Eastern time right here on the channel and on our site, stockmarkettv.com. If you wanted to get that book that Kenny mentioned earlier, you can just email us. Our email is in the description. It's just questions@stockmarketmedia.com. We will reply with the PDF for that book.
Mhm.
And we'll be back on Monday. Monday's guest was a request from someone on the team a couple weeks ago. It is Mr. James Bartoloni.
Oh.
Be on the show. I was specifically asked to get Bart on the show. I have reach outs to everyone who's been requested has been reached out to. Matt Warder, Ryan Dietrich, Mike Hurley. So working on that.
And Braden.
Oh, that's right. Him I did not reach out to. I would do that. Yep. Okay, cool. That'll be a good place for us to wrap. I think the market is open. Let's go trade. So everyone have a great rest of your day. Have a great weekend. Enjoy the football. Enjoy the fact that it's starting to warm up in most places around the country. We're out of this deep freeze, which is pretty cool. And I had one more thing to say. Shoot, what was it? I can't remember now. Son of a. Anyway, whatever. If I remember, I'll tweet it. Smash the like. Thanks for watching. Go make some money, all right?
Peace.
I can't take no loss. I don't even know what it costs.